All right, let's jump right into the market action for December 18th. Now, the headline numbers might look pretty quiet, but trust me, the real story is what was brewing just under the surface.
So let's kick things off with the Nifty 50. It closed the day at 25,815, basically flat. I mean, after the incredible run we've seen hitting all those record highs, this isn't a drop, not at all. It's more like the market just tapped the brakes.
And it's pretty much the exact same story over on the Sensex, which finished just a hair in the red at 84,481. You can really feel that hesitation, that pause, spreading across all the big indices.
And to round things out, the Bank Nifty, yep, you guessed it, also finished the day basically unchanged. So the big takeaway here is that across the board, that powerful upward momentum we've been riding, it's kind of hit a wall, at least for now.
So, what does all this mean, really? Well, think of it like this. A sprinter just finished a huge race. They're not collapsing, they're just catching their breath, right? That's the market today. After this massive rally, it's just taking a breather, trading sideways in a really tight range. This is what we call a classic consolidation day.
Okay, so let's start peeling back the layers on this whole consolidation thing. Because I'm telling you, while the closing numbers might look sleepy, the actual trading day, it was anything but boring.
And that brings us to the big puzzle of the day, doesn't it? If the market ended up going nowhere, why did it feel so choppy, so volatile during the session? What in the world was pulling it in opposite directions all day long?
Well, it was pretty much a perfect storm of conflicting pressures. You had people taking profits off the table after that big run-up. Then you had some not-so-great cues coming in from Wall Street. And on top of that, a fluctuating rupee was weighing things down. It was a genuine tug-of-war all day long. Okay, now this is where the story gets really interesting. Because while the big headline indices were flat, you gotta look at the broader market. Mid-caps were down over 0.5%, and small caps, they dropped almost a full percent. So that tells you the selling pressure was actually pretty strong, which is hidden under the surface of the Nifty and Sensex. The only real bright spot today, the PSU Bank.
And here's the kicker. Despite all that choppiness and the selling we saw in the smaller stocks, take a look at the VIX, the fear gauge. It actually went down. This is so important. It tells us that even though there was selling, there was absolutely no panic. The market was actually pretty calm and orderly about it.
Okay, so with that in mind, let's zoom out a bit and look at the bigger picture pressures that are really shaping the market right now. Just look at this number, 1.60 lakh crore rupees. That is the absolutely staggering amount of money that foreign institutional investors, or FIIs, have pulled out of the Indian market just since July. We're not talking about a small leak here. This is a massive outflow of capital. And all of this persistent selling from FIIs, it's acting like a giant anchor on the market. I mean, every single time the bulls try to gather steam and charge higher, this headwind is there, just pushing them right back down.
But, and this is the crucial but, this is being met by incredibly strong buying from our own domestic institutional investors, the DIIs. And honestly, this slide perfectly captures the central battle happening in the market right now. You've got the foreign institutions selling on one side, and on the other, you have our domestic players stepping in, absorbing every single share. This epic battle is what's defining the market's incredible resilience.
All right, so we know we're in this consolidation phase, this big tug of war. So what's the game plan for tomorrow? What are the really key levels we need to be watching?
Okay, for the Nifty, it really boils down to two numbers. On the downside, the floor. The crucial support level is 25,700. The bulls absolutely have to defend that line. If they can hold it, then the next big target, the next psychological barrier to break, is 26,000 on the upside.
And for the Bank Nifty, it's a very similar looking battlefield. The line in the sand on the downside is 58,500. That's your key support. If the buyers can hold strong there, the next objective is to push up and challenge that resistance at 59,500. These are the levels that are going to define the next big move.
So how do you trade this? Well, a lot of analysts are suggesting a buy on dip strategy, especially in strong sectors like banking and telecom. But, and this is important, you've got to be disciplined. That means trailing your stop losses closely to protect your capital, especially around that key 25,700 Nifty level. Also, keep one eye glued to the VIX. If you see it spike above 10.5, that could be your signal to be a little more cautious. In an environment like this, focusing on quality large-cap stocks is probably your best bet.
And so at the end of the day, it all boils down to this one single question. Who is going to win this epic tug of war? Will the relentless selling from foreign institutions finally crack the market's resolve, or will the immense power of the domestic buyer continue to hold the line? That is the story we'll